They never saw it coming. Overnight, 14 condominium towers in Vancouver, once considered solid investments, bastions of upward mobility, and symbols of stability, suddenly found themselves without insurance coverage. The news sent a shockwave through the city's fragile real estate underbelly. Homeowners woke up to calls from building managers, letters posted to their units, silent messages that destroyed the illusion of security. Reassurance vanished. Fear set in. If this is true, and in our scenario, we explore how it might be. It could trigger a meltdown that will leave thousands of families trapped, banks reeling, developers bankrupt, and the entire Vancouver condo market in freefall. You might think that's hyperbole, but with current trends, it doesn't take much to tip the balance. Let's examine why this nightmare scenario, 14 towers losing insurance, is frighteningly plausible. First, the background. The 2025 condominium market in Vancouver is already under serious stress. According to Canada Mortgage and Housing Corporation, CMHC, by the first quarter of 2025, condominium apartment sales in Vancouver had dropped roughly 37% compared with the boom years before 2022. Inventories are piling up. In 2024 alone, approximately 12,442 condo units were completed in Greater Vancouver, a record-high completion number. On top of that, resale prices are sliding. Average resale condominium prices in Vancouver fell from their peak in 2022 to about $870 FT squared by Q1 2025. That alone makes condos a shaky bet. But now add to that the fact that insurance for condo buildings, master policies covering common areas and exteriors, has become a crisis sector across British Columbia. As far back as 2020, insurers began dramatically raising premiums, limiting coverage, or pulling back altogether from some condominium corporations. Why? A perfect storm of rising claims, increasing cost of construction and repairs, stricter underwriting, and perceived elevated risk. By 2025, pressure on insurers has only worsened. Worldwide and locally escalating climate events, aging building stock, higher maintenance costs, rising material and labor inflation, and increased liability risk have squeezed insurers' profit margins. Reinsurance costs have skyrocketed, regulatory scrutiny has tightened, and insurers are growing selective. They are refusing to renew or issuing policies with narrow, high-cost terms for older, riskier buildings. That dynamic is real, documented, and ongoing. Now imagine 14 Vancouver towers, perhaps older or mid-aged buildings, perhaps with maintenance backlogs, marginal capital reserves, maybe some history of leaks or deferred repairs, hitting the threshold where insurers simply decide, we don't touch this risk anymore. Termination notices go out, renewal deadlines expire, master policies lapse, common areas, exterior walls, roofs, elevators suddenly uninsured, homeowners associations frozen, no coverage for water damage, structural failure, liability, fire. For affected owners, the consequences would be immediate and brutal. Many unit owners have mortgages requiring valid insurance coverage. Banks may refuse to renew mortgage financing until valid master insurance is restored. Buyers might shy away with pre-sale deposits, down payments, and closing schedules in limbo. Some owners may face demands to prepay or post hefty deposits to secure coverage elsewhere, if even possible. Developers with unsold units may default or declare force majeure. Realtors will need to disclose that buildings are essentially uninsurable. The market suddenly becomes scarcity of certainty, and value evaporates. It gets worse, because the condo segment in Vancouver is heavily investor-driven, with many units owned by landlords or speculators expecting rental income and capital appreciation. The pressure intensifies. Consumer confidence sinks. Rental income, already under pressure due to soft demand and high vacancy, becomes uncertain when building maintenance and liability risk rise. Monthly carrying costs jump, while rent yields remain flat or fall. Investors begin to cut losses. This is not pure speculation. The broader pattern is documented. The 2025 Housing Market Risk Report from CMHC flags significant condominium apartment market risks in Vancouver. Declining sales, growing inventories, and downward pressure on prices. Meanwhile, industry insiders have described a condo coverage crisis, a trend where insurance availability becomes harder and more expensive for many strata buildings across British Columbia. So yes, 14 towers losing insurance overnight might seem radical, but under the current combination of market stress, supply glut, weak demand, aging buildings, rising liability, and insurer pullback, it is disturbingly plausible. Now, picture this. The day after the notices, social media and local news light up. Residents compare resignation notices. Owners scramble to read complex strata insurance policies. Some begin quietly putting their units on sale if they can. Others reach out to lawyers, bankers, brokers. Panic grips hundreds, maybe thousands. That's the incident. A sudden shock. But the real nightmare begins in the next days and weeks. The chaos will spread fast. Developers who still have pre-construction or recently completed units begin to see demand collapse because no buyer wants an uninsurable building. Lenders freeze sales. Some suspended closings altogether. Pre-construction deposits are refunded. Some developers go insolvent, unable to meet required indemnity obligations or to secure bridging financing. Banks, now facing a wave of mortgage delinquency risk, tighten underwriting not just in those 14 towers, but across any condo building with similar risk profiles. Mortgage approvals plummet, investors exit en masse, rental market floods. Tenant demand dries up as units become harder to maintain, landlords pass down costs, or simply walk away. For homeowners, the human cost is brutal. People who thought they secured a home or an investment suddenly find themselves trapped. Those who bought recently may be underwater. Equity evaporates. Some may face demands from strata boards for special assessments to repair deferred maintenance or retrofit safety features to requalify for insurance. Others might struggle to sell or refinance. Families, perhaps young professionals, immigrants, retirees, confronted with financial uncertainty, legal hassles, stress, and the terror that their home might become unsellable, devalued, or even unsafe. For the broader Vancouver housing market, this unraveling is far from isolated. These 14 towers might be the canary in the coal mine. If insurers begin to reevaluate risk citywide, especially for older condo stock or buildings with deferred maintenance, more towers could become uninsurable. Inventory, already at record highs, would swell further. Prices continue to fall, dragging down the entire segment. Developers stop building. Banks restrict lending. Speculators flee. The condo boom becomes a crash, not just a correction, but a systemic collapse. This is no small business. The condo segment forms a large portion of Vancouver's housing stock. The crisis in insurance, coupled with oversupply, falling demand, high interest rates, inflation, construction cost spikes, and regulatory pressures could trigger a cascade. Building by building defaults, mass delistings, price freefall, and a wave of negative equity stories. The ripple could even leak beyond Vancouver, damaging investor confidence in Canadian real estate generally. You might call this fear-mongering, but it's a what-if, grounded in trends, weak demand, record inventories, softening prices, documented insurance market contraction, rising construction costs, aging building stock, and global reinsurance strain. It's not shouting, "This is definitely happening." It is showing a credible path, a worst-case scenario, built on real signals. And if you're watching the Vancouver condo market as buyer, seller, investor, or tenant, you need to sit up and pay attention. Because once the master insurance disappears, equity, liquidity, stability, everything you assumed you had vanishes with it. As the news of the 14 Vancouver condo towers losing their insurance spreads, the market is beginning to feel the early tremors of what could become an all-out disaster. The chain of events already unfolding is just the beginning, the first domino in a series of catastrophic financial and emotional impacts that could reshape the Vancouver real estate market for years. It's not just about those 14 towers anymore. As fear spreads across the city, homeowners, investors, and developers alike are waking up to the stark reality that this crisis could have a domino effect. One tower falling leads to others. As insurance companies tighten their criteria and other developers realize the same fate could befall their properties, the question becomes, how many more buildings are uninsured, and what happens when these two lose their coverage? For developers and condo owners, the risks are mounting. If more towers find themselves uninsured, what happens to pre-construction projects? Buyers will demand new terms, and in many cases, simply walk away. In the face of rising insurance premiums and the collapse of trust in the stability of Vancouver's condo market, developers will struggle to secure pre-sales. This will lead to stalled projects, delays, and eventually bankruptcies. The rippling effect will be felt by thousands, from tradespeople to construction companies, all the way down to the homeowners who had placed their hopes in these new developments. Banks, once the pillars supporting Vancouver's housing market, are now on high alert. A crisis like this one, when a significant portion of the housing stock becomes uninsurable, raises alarm bells in every risk assessment department. Mortgage defaults are already a growing concern in Vancouver, where property values have been slipping for months. With condos becoming difficult to insure and harder to sell, homeowners who are already underwater on their mortgages might find themselves unable to refinance, unable to sell, and facing the very real possibility of losing everything. Some will try to default strategically, walking away from their properties. Others will fight tooth and nail to keep their homes, but for many, the financial stress will be unbearable. Mortgage brokers, too, will be on the front lines of the fallout. With home values already in flux and banks tightening their grip on lending, they'll find themselves scrambling to keep their clients from defaulting, while at the same time facing a shrinking pool of available properties. Homeowners, desperate to hold on to their properties, may find themselves forced into selling at a loss, but with no one to buy. The reality is, with insurance gaps and diminished confidence, Vancouver's housing market will come to a standstill. This creates a dangerous cycle. As demand falls, inventories continue to rise. That leads to further devaluation and more stress on an already overburdened financial system. To make matters worse, condo owners who were hoping to sell their units and cut their losses may find themselves trapped. The loss of insurance coverage makes it nearly impossible for these properties to go through the standard sale process. Buyers, both local and international, are not going to touch properties with no insurance. The fear of losing money or being stuck in an investment that could depreciate further will be too much. For potential buyers, this could be a red flag so large they'll turn their attention to safer markets. But Vancouver's high-cost real estate is already on the edge, and losing that premium appeal will mean the market shrinks even more rapidly. This isn't just a local issue. If Vancouver's market continues to unravel, it could have national implications. The Canadian real estate market as a whole is already seeing slowdowns in key regions, and a full-scale crisis in Vancouver would send shockwaves across the country. From Calgary to Toronto, investors will be looking at Vancouver's disaster with caution, and Canadian banks could face heightened pressure on their mortgage portfolios. If Vancouver's condo market crumbles, the ripple effect could cause a broader economic slowdown, with banks forced to tighten their lending even further and housing markets in other provinces following Vancouver's lead. This is an economic domino effect that could ripple out and trigger a broader recession across the Canadian housing market, threatening jobs, income levels, and financial stability for Canadians. The human cost of all of this is immeasurable. People who invested their hard-earned money into condos, hoping to make a secure investment or create a stable home, are now facing the nightmare of potentially losing everything. For many, their condo was meant to be their retirement plan, a safe haven for the future. Yet, in an instant, their dream home could become an anchor weighing them down financially. The emotional toll is one that's hard to quantify. Imagine being an owner of one of these condos, waking up to the realization that your home is no longer covered, your investment is sinking, and the financial future you had planned is now in jeopardy. It's not just about the loss of money, either. For many Vancouverites, owning a home is tied to their identity, their status in society. Losing that can feel like losing everything, and the psychological strain, anxiety, stress, and the relentless pressure to figure out a way forward will only add fuel to an already volatile situation. The burden will fall disproportionately on the younger generations who are entering the market with the hopes of homeownership. For them, this isn't just a financial setback. It's a generational blow that could prevent them from owning property in the city they grew up in, forcing them to look elsewhere for opportunities. As this crisis continues to unfold, the real question becomes, how does Vancouver and the provincial government respond? Will Premier David Eby's office take immediate action to stop the fallout? Or will they wait too long, allowing the market to collapse even further? There are signs that the government is already aware of the mounting issues, with reports from CMHC suggesting that the risk of mortgage default and the reduction in housing market activity in Vancouver have reached crisis levels. However, Politicians may be hesitant to intervene too drastically for fear of triggering even worse outcomes. But here's the chilling part. Even if the government intervenes with policies to reduce risk or help homeowners navigate this crisis, the damage might already be done. If the insurance crisis spreads and more properties lose coverage, the entire housing system could collapse, not just in Vancouver, but across the entire province. Once the insurance market starts pulling out from high-risk properties, it could spiral. Developers will refuse to build. Investors will pull their capital, homebuyers will hesitate, prices will continue to plummet, and the market will remain in a state of stagnation. For many who have poured their life savings into Vancouver real estate, the risks now outweigh the rewards. The damage may already be too deep. If this crisis isn't dealt with immediately, we might see the total collapse of the Vancouver condo market and potentially the beginning of a much larger housing crisis in Canada. A collapse in the condo sector would likely push residential real estate into an unprecedented nosedive. Those left holding the bag will be stuck, unable to sell, unable to refinance, and without any safety net. So, what happens next? Can the government, the real estate developers, and the insurance industry find a way out of this mess? Or are we on the verge of watching Vancouver's real estate market unravel in real time? The next few months will tell. And if you're not prepared, you could be next. But don't just wait and watch. Comment one below if you think this crisis is just the beginning. And let me know if you're worried about your own investments. Subscribe to the channel for more updates on this ongoing disaster and stay informed about what's happening next in Vancouver's housing market. Time is running out, and the worst may still be ahead.